Hello everyone, today is May 27th, 2020, Wednesday. The market is closed. Right now it's 10:40 p.m. Let's take a look at the market right now. I've been saying for the last month, I think for the last 20 videos, I've been saying that the longer we stay horizontal in this area, the higher we're gonna break out. The higher the chance we're gonna break out and continue to go up. And this is exactly what has happened in since May 22nd, that we broke out and the market just continued to go up despite all the bad news, the general economy, the death from the COVID-19, all that stuff. It doesn't matter really. The market's gonna do what's gonna do. So you have to understand the market structure, which I've been saying that the longer we stay here horizontal, we're going horizontal, the higher the chance it's going to break out to the upside, not to the downside. Okay, and that's exactly what happened. And today I really want to talk about there's one very important observation that we need to pay attention to right now. It's very important. So we want to figure out where we are in the market cycle, right? So every single rally, rally and up, there's gonna be up and there's gonna be downs, and our job is just to capitalize the upside and also really prevent us from, being in the entire downside like this. Like this kind of move is something we have to avoid. For example, in this particular decline that we had since February, I actually got out around this area. I got stopped out around this area, so I was able to protect my my portfolio, and at the same time I went net short around this area, and I got out around here when this particular trend line got broken. Let me just show you here. There is a very obvious trend line that basically when the market start going towards this area, I basically got out. So I was able to capitalize on a decent sized gain during the crash we had in March. Okay, and so our job is to not to buy at the bottom and sell at the top. It's just to really understand where the market is, right? So for example, here when the market was going this kind of vertical between October to February, this was a very low volatility. This is a warning here. And today I do see some warning in the market, despite the market is going pretty strong. So let me just show you what I'm talking about here. So this is the E-mini 500, S&P 500 top company in the United States. And the strongest performer, the strongest sector so far is actually NASDAQ, right? So if you look at NASDAQ, E-mini NASDAQ 100 futures, NASDAQ has recovered way better than S&P 500. And NASDAQ doesn't even have a horizontal consolidation area. It actually just keep going up, making higher highs and higher lows. So this is one of the strongest sector. But today, actually this week, the NASDAQ and the S&P 500, there's actually a divergence. In the past, since the beginning of this rally, the NASDAQ is outperforming S&P 500, right? It has been outperforming. But since this week, the NASDAQ is actually underperforming the S&P 500. So all the technology stocks are actually underperforming, which means the large funds, the smart money, the large players are actually switching sectors from the technology sector to other sectors in the stock market to try to find values, which means there's still a lot of money in this market right now. But for the technology sector right now, I think is getting plateaued. And this week, the price action just is an indication of that. So you can see the NASDAQ actually underperformed S&P today. So let me just show you. So SPY is up 1.49%. If you look at the NDX today, it's it's only up 0.55%, right? So that's the thing. That's the thing about So the Nasdaq is absolutely underperforming S&P 500. The reason is the S&P 500 actually has a lot of Nasdaq. They do share a lot of companies together, which means what's really happening is that the technology sector is actually underperforming all the other sectors, especially the Dow Jones. The Dow Jones actually outperforms everyone. So the Dow Jones is up quite a bit. The Dow literally broke out very strongly since the beginning of this week. You can see the Dow, again, the same thing. Sorry, this is the wrong one. It's DJI. The Dow actually broke out from this horizontal level. Again, I've been saying that the longer we stay horizontal in this year, the higher the chance we broke out to the upside. And that's exactly what happened. If you try to short this market, you're just stupid. Okay? You're just like, I don't know what's wrong with you, right? You like lose money. I'm seeing so many, like, watch my previous video about examples on YouTube. There are so many bearish conversations and opinions on YouTube for some reason, and everyone's saying the market's going to crash. It's a bear trap. Sure, it's a bear trap, all right, but if you're shorting here, you're dead. Like you're dead. You're wiped out. This thing breaks out. If you're still holding your shorts, every day is very painful for you. Every day is going to be very painful, and eventually it's going to get to your psychology. And imagine this market just keeps zooming up, right? And someone holding shorts around this area are just so much pain. Even if you doing some non-leveraged shorts, you're going to be down like 16%, 20% by the time the market gets to this point. And it's just painful to your portfolio. And I know a lot of people actually don't short these kind of index with zero leverage. They short with the leverage. They short with the options. So by the time, like just the last 2 days, the option price for the Dow, if you're shorting the Dow, if you're shorting S&P, your option price would have dropped by more than 50%. So you would have lost 50% of your portfolio if you are shorting with these leverage products. So it's very, very dangerous that, when the market goes horizontal, it's trying to accumulate energy. It's not going to the downside. This is obviously going to upside. The high chance is going to upside. So, like, I don't know what people are doing on YouTube. Like, if you listen to all these guys, you're bankrupt already. You're bankrupt. Anyway, so what I'm trying to say that we want to see which stage of this rally we are. I would say we're actually closing. We're actually on the closing into the later stage of the rally. The reason is the Nasdaq has been fully valued. It's underperforming now because all these companies' valuation is pretty high right now, and there's still a lot of money on the sideline. Still not a lot of money and buying power in the market that's trying to find relative value. I'm not talking about absolute value. I'm talking about relative value. Absolute value, there's barely any companies that's actually undervalued in the market right now. The valuation is very high in the market, but people still trying. The big money is still trying to find relative value, right? Where are the relative value? The relative value is actually in the Dow Jones, right? These companies in the Dow, they are not internet companies, so they are being impacted by the COVID-19. These companies are being, impacted by the COVID-19 the most. And companies like, for example, Home Depot, Disney, the park is closed, right? Chevron, all these oil companies, they are part of this Dow index. So these companies are actually going up right now. So if you look at the Chevron Corporation today, you can see that Chevron has bounced off and is going up. ExxonMobil, same thing. What else? Let's see. These banks actually rallying. The banks actually being impacted by quite a bit, right? Because think about it, a lot of people can't pay mortgage. Look at Goldman Sachs now. It's just going vertical. And this is a huge company. It's a $72 billion company. It's a huge company, right? The price is going vertical. It's because there's so much money on the sideline because of money printing. There's so much money on the sideline trying to chase after values, chase after assets. So this stage is a later stage of rally. Let's be sure. And we're entering the euphoric stage very soon. in my opinion. And this stage is, and the euphoric stage can last, couple months even, right? Think about it. If you look at the S&P 500, so we could have something like this, that rally, and we go flat again, then we just continue go up with us, a less vertical manner, right? We could go up with this kind of slope, right? And it could take a couple months, for the market to drop again. So you don't want to short the market right now, absolutely not right now. Like the market going vertical, it has a lot of energy. So look at the past, when the market goes vertical, the drop would happen, a month or two after the vertical move, right? You absolutely don't want to short these kind of moves. Try to prove that you are right, that prove that you know better than the market. I'm telling you, you don't. You know better than the market only in terms of losing money, okay? So the market right now is close. We are entering the late stage of rally. That's my opinion based on what we're seeing so far. And at the same time, we are entering a risk-off mode. A risk-off mode is that the money is going to chase after anything with the relative value. What I mean by it is that anything that's not bankrupt, anything that's probably going to survive after the coronavirus is gone, these companies are going to be pumped up, right? So as long as the company is not likely to go to bankrupt, not like Hertz. I mean, obviously Hertz is going to keep going down because I already declared bankruptcy. But any of the companies that's going to have relative value, still have some value, and they have beaten down quite a bit from the top. Like even some of the transportation company, like let's look at Dow Jones Transportation Average. This just tells me that even the transportation average is going vertical, going up massively. It just tells me that there is so much money that's chasing after a relatively small amount of assets, or small amount of assets with relative amount of value, right? And so we are entering a risk-off mode, and that is very, very beneficial for one asset class. That is cryptocurrency. That's what I'm trying to get to. Okay. I'm pretty bullish on the Bitcoin and Ethereum, all these guys, because like today, this kind of moves just tells me that cryptocurrency rally is coming. It's coming. It's just right around the corner. Like I don't think the market maker can hold down this price to this level any longer for maybe Bitcoin, Ethereum, all these cryptocurrency assets. Sooner or later, these huge funds, all these monies they have access to all markets, by the way. Like for example, the platform I'm using, I can buy anything, any assets in this world. I'm using the institutional level platform, a brokerage, right? So my brokerage actually allows me to buy any assets in the world, any types of assets. I can buy bonds, I can buy fixed income bonds, the index, the futures. That's what I'm paying. Most people don't even have access to the futures. I can buy all these markets. I can buy European stocks, Japanese, Chinese, Hong Kong. I can buy assets anywhere. I also have access. That platform also allowed me to access to Bitcoin products, Ethereum products. So these hedge funds, they can deploy their money anywhere, as long as it's gonna make money for them. So don't think that all these markets are disconnected, or they are the Bitcoin is just for enthusiasts. I mean, all these assets are being watched by the institutions. The institution can't deploy their money into these assets instantly. Okay, so once they run out of ideas, once they run out of stuff to buy, they're gonna go buy cryptocurrency assets. Some of the institutions gonna buy those. So we're running out. The valuation for Nasdaq again is quite high right now. We're near all-time high. So these monies are switching sectors, right? They're switching to Dow Jones because the Dow is not near all-time high. right? We're still pretty far from that. And so they're going to pump these guys up, obviously. They have a lot of money, they're going to pump these guys up. And there are other sectors that's being beaten down, they're going to pump it up. And then the money is going to, cryptocurrency, Bitcoin, Ethereum, all that stuff. They're going to pump everything up. This is what happens when you, all of a sudden, the Federal Reserve prints $6 trillion. Fed balance sheet, right? Take a look. I've shown you guys this chart many times. I just want to show you again. $3 trillion, September 2019. That's the Federal Reserve balance sheet. $3 trillion. And 2008, we have a $0.8 trillion. And it took us, more than 10 years to get to $3 trillion. Almost $4 trillion, whatever. Just takes us a month to double, right? To double the money supply, essentially. So I am surprised that the stock market hasn't doubled yet, actually. Like since 2008, a $4 trillion, a $3 trillion increase from 2008 can increase our index from, from this level, 700 to 3,000. That's like fivefold, right? Now we just doubled the money supply. Doubled it. Like our index, like technically speaking, logically speaking, just based on how much money right now in the society, this thing should be at 6,000. Not at 3,000. Like not as all these idiots trying to tell you that it's gonna crash. The market right now, why is not at 6,000? Okay, it should be at 6,000. We have all this money in the market, right? In society, all these money that's being pumped into society, and these money, the difference between the quantitative easing that we're doing right now versus 2008 is that when they are doing quantitative easing in 2008, they are pumping the money into the banking system. So if the banks they're not willing to lend, they're not willing to lend out to the economy. That was the issue. The banks are not willing to lend because they are risk averse, especially at the bottom, at the peak of the financial crisis, at the bottom of the stock market. The banks actually very risk averse because they are afraid of taking even more losses. So they are reluctant to lend it out. So the quantitative easing effect wasn't as dramatic as today, because today we literally print out the money and send to every single citizen in the nation, and they get a check in their bank account. Their bank account gets more. They get more money in the bank account, so the people have that immediately spending power. That is very different from the quantitative easing in 2008. The money that we have printed out recently are already in circulation. That's why we have these really crazy vertical moves in all sorts of asset classes, especially for stock market. If you buy these kind of assets, your holding cost is zero, right? If you buy real estate, you still have holding cost, you have transaction cost, you have all that stuff. But to buy stocks, your transaction cost is much lower, and you have liquidity, all that stuff. So that's why when you have printed a lot of liquidity into society, you have injected a lot of liquidity into society, the first effect, the first obvious impact is going to be on all these liquid virtual assets like S&P 500, stocks, cryptocurrency, forex, all that stuff, right? These are the ones going to react to the money printing process almost instantly within a month or two. So that's why I'm saying that the Bitcoin, the cryptocurrency market are probably going to be jacked up as well. The chance of that is just so high. It's just so high based on what I'm seeing in the market right now. All these Dow companies, right? All these Dow Jones companies, they're like not even good. They're like horrible, right? These companies, some of the company actually they have so much debt. Their valuation is horrible. Like you're buying them at the all-time crazy valuation that's higher than any time in the past history. So, and even these kind of trash assets, they're junk. They're like junk bond. They're junk, but they're just like one step away from bankruptcy in a junk status. So they're not gonna go bankrupt, but they are pretty much horrible financials, horrible everything, and they're getting bought up. Right? Look at this kind of stuff. They're getting bought up, and I just can't fathom that the next wave is not going to be pumping these guys in the cryptocurrency arena. I just can't imagine. I think this consolidation area is just accumulating energy when we're going to upside very soon, probably in a month or two, as early as June, mid-June or early July. We're gonna see a massive rally in these markets as well. Because right now, we are absolutely, in my opinion, that we are risk off. We're risk off. There's no concern for risk. Anything that's not gonna go bankrupt, that's not gonna lose money, that's gonna survive is getting bought up. Okay? And that's what's happening right now. Okay, so that's it for today, and enjoy your night, and I'll see you next time. Bye bye.